All right, good morning, good afternoon, good evening, everybody. We've got lots of economic news to cover here today, lots of trade ideas coming. Hope you guys are ready. Again, this is Will Bridges from 123Trade. Do want to make sure that we have all the technology doing what we want it to do. Just want to make sure you guys can all hear my voice, see the screen. How's everyone doing here today? How are we doing, Dava? Ben, Antonio, Colin, Gabe, Georgina, Jan, Trudy, Val. It's time to wake up. We are about ready to get started here. It looks like a lot of people still typing in their names and stuff, so might give it another 20, 30 seconds. And don't want to leave anybody in the dust here. Some people may be here for the first time. We've got a lot we're going to cover in here. I may actually, I don't know, I'll pull this up. I'm going to share this page with you guys just because we haven't launched this page yet. Well, we haven't posted it anywhere yet, but it does work. And what I did is I built a handful of RSS feeds to do some Google searches for me and then populate the most popular articles from around the world. So basically, I just built a tool that goes through what I used to search for to read the news every day. And now it's just on one page. So I'm going to share that with you guys. There it is. It's in the chat box. You guys can open that up and look at it whenever you want, however you want. It should be on the screen right now. You guys should be looking at it right now. I did send it over to the marketing team. I'm a functional guy. I built this page. I wrote the stuff that's on it, but but I would say from a web design standpoint, I'm going to let those professionals do their thing. I just didn't want to not share this with you guys. I was reading through this morning. I saw something that I don't know. I haven't looked at the news for a couple of days. This Pingdemic in the UK. I don't know how many people we have in here from the UK, but this just seems crazy to me. So I don't know how else to put that. But if the government sent me a text message and told me to stay, inside for 10 days, I would be confused and probably not do that. But I'm an American and we're jerks. So I totally get it. Yeah, Dave, I don't know how you guys are dealing with this. When I click on stuff like this, like how the government can basically just send people a message, like an Amber Alert type of deal on your phone, and then just suddenly all the employees are gone. Just seems madness to me. So that's not going to be good, for the UK economy in the short run. That's I guess you guys have the same rule we have here in the US. It's only illegal if you get caught. But generally speaking, I don't know. This stuff is kind of I don't know. You guys have your own opinions. This isn't about politics. We're here to talk about making money, but this is something that's going to hurt the economy. It's definitely not good to just, tell people not to go anywhere for 10 days if you want anybody to make money and feed their families, etc. But let's go ahead and get the risk disclaimer thing out of the way. What this says is that you put your money in the Forex market, or any market really for that matter. That's what investment really is. It's taking risk to try to get a reward. Okay, so you never want to risk capital you can't afford to lose, and you do have to understand you've got to risk it to get the biscuit, folks. No such thing as a guaranteed trade or investment. We're going to do the best we can to give ourselves a big edge if we can. If you do have questions, then get my attention in the chat box. If I don't get to you right away, give yourself a note or something. I will do more questions at the end here, and we are going to do a little bit of on demand. If you guys have something specific that you want to see here today, I'm going to go through a lot of news and get you interested in some stuff that you'll probably want to look at and trade once we go through the calendar here and check out a couple of other things here. But some of you might be fairly new. I know that there are people in here that are probably here for their first time just in my session, and I don't want to leave you behind. If you have a question, 10 other people probably have the same question or more, so don't be shy. There is no such thing as a bad question. Those of you that are here that are new, maybe you're not 100% sure exactly how you ended up here, which is entirely possible. And maybe you just found this video on YouTube. But that being said, we assist in getting regulated, secure brokerage. Our primary function is to make sure everybody has awesome trading conditions that you can pretty much trade well, whatever it is that you want to be trading with somebody that you can trust. That's kind of the whole point of our initial existence. And then it kind of grew from there, became a lot more guidance, mentorship. We have a ton of experience on this team. So if, let's just say if you're looking for 400, 500 to 1 leverage, that type of stuff, then usually we can find that for you. And make sure that you don't get lost in translation just hooking your stuff up. And we provide a lot of, we have up to $20,000 in bonuses on our website. So if you guys haven't seen that, if you guys are planning on reloading your account or loading it, a lot of people start with, $500, $1,000, load the rest of their money later. Just want to show you guys how much bonuses are available. Those of you guys that have not seen this, okay? Just going to get this out of the way. Then we're going to get to the cool part. But there's, over $20,000 worth of stuff. And all you got to do is deposit money in your trading account, which you might have already been planning to do. So maybe we didn't need to give you anything for free, but I just want to show you guys we can get you free stuff. So just want to make sure that's clear. All of our YouTube videos, all that stuff are also on our webpage. I think it shows just 6. I think it'll show up to 6 of them in these little carousel things. But generally the newest ones are going to be here. And I think a great resource. There's going to be the news page on here also soon. I already had that up, but we haven't posted a link to that yet. But that should be up soon. We used to go through all this stuff here. This used to be the session here every week. We used to go through, placing your first trade and, trading with your phone and your tablet, blah, 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 all this, newbie type stuff, which is fine. We just don't think it's necessary to do it in here every week. All of these videos exist and they are on our YouTube channel. So if you're looking to do any of these things, then go look on the YouTube channel and you can watch that as many times as you want, whenever you want. But for right now, we're going to go ahead and get into, what the people came to see here today. Let's get the calendar up here first. Okay, let's go ahead and get a quick refresh on here. I know we've had a lot happen. Okay, I want to go over this week. Give you guys an idea of what's going on with the world. This is the most unbiased news report that you're going to get. Access details to 123Trade. Well, David, if you're looking for stuff like that, you're probably talking about this Discord server. I'm going to go ahead and send that to you. I guess I'll put that in the chat box for everybody. If you're not in this Discord server, I'm going to post the trade ideas from this session in Discord. I'm also going to post them in the Facebook group. So if you guys are not in either of those, that's where you go get all the resources that we put in here. So I'll also put a blog in there sometimes. I'm fairly active myself in there. Let me find this link for you guys. 1 second here. And this is the Facebook group I just put in the chat box here. All right, so let's get back to business here. Okay, so this week, we had whatever OPEC meetings at the beginning of the week. They're just kind of probably trying to plot how they can charge more money for oil by producing less of it. Oil market seen improvement in demand, big surprise. I've been talking about the biggest demand push in years, just because we shut down the entire planet. Obviously, there's going to be a push in demand as the planet opens up, and right now that seems to be slowing. I know Australia is looking at lockdowns. We've got this Pingdemic thing happening in the UK, and they're trying to scare us with the Delta variant thing here in the US as much as possible, warranted or not. That's what they're doing, and that is going to slow down economic activity. So all of that stuff said, we're going to get past this OPEC thing. We're going to maybe look at the oil chart here today. Retail sales in Australia are down. Not surprising, especially considering they're going to shut people. If they're going to keep people at home, hard to go buy things at the store. Crude oil inventories, these actually went up for the first time in a while. If you guys have been seeing this, crude oil inventories have been falling. So what this means is that, either supply has increased enough to pick up, the slack for the demand, or there's just not as much demand. Both of those are typically going to drive down the price of oil. And that's really, I think, what's been happening. We'll get to the chart here in a minute. But refinancing rates, all this stuff didn't change. Europe took more of a balanced approach, I guess, maybe than they had previously. They're not necessarily saying they're going to lower rates as much, but they are committed to keeping them low. So that keeps them kind of dovish, downward, weak on the euro. However, not quite as weak as a signal as a lot of traders would want. A lot of traders might want you to hear them say, "We are committed to having the least expensive money on earth," but they're never going to be that clear. So quit dreaming. Unemployment claims. This is bad news. Okay, in the U.S. here, a lot more people are unemployed. What that means is that a lot more people are going to be getting money from the government, not for working, just for not being able to work. Not saying that that's necessarily always their fault. Sometimes it is, sometimes it isn't. But generally speaking, us supporting better part of 500,000 people with bigger than normal, had a bad experience. Antonio, if you're having an issue like that, then please send me a message directly. You can send one to either W Bridges at 123Trade or brokers at 123Trade, whatever you'd rather do. But I'm not sure exactly what you've got going on, and I would like to talk to you about it. But let's keep on moving here. Retail sales, month over month, GBP. Somehow this is up. Okay, I'm not sure what's going to happen next month, especially if you guys are. I'm not sure how serious the Pingdemic thing is, or how serious people are actually taking it. But retail sales numbers look like they've been, just say, a little bit weaker than they were earlier this year. April, May, we had these big booming numbers, and these are month-over-month numbers. So those are big pickups and big swings, and we're not quite seeing that right now. It is better than anticipated, but that doesn't necessarily mean it's good. The Eurozone down here, these PMI numbers, anything over 50 is a positive number. So, take it with a grain of salt. These German manufacturing is doing great. It's very bull euro. A lot of people are talking about maybe the euro could get to $1.18. Okay, so we're going to get through all this stuff here. I just want to get a feel for what's going on in the world. And, things have, kind of slowed down in the UK. We're talking about this Pingdemic thing. That may cause people to close out of the stock market there, hold on to more dollars, save some more money. Who knows? Let's go look at the chart here. CAD numbers, retail sales are down. So Canada continuing to feel the pinch. We've got an announcement coming out here on the USD in about 30 minutes. So that, hey, maybe we're at a decent price right now with that. But we should see some movement during this session. So let's go ahead and get this charts up. Let's get these charts going here. Okay. And let's go ahead and take a look at this. Pound CAD's probably a good place for us to start. And hold on, we should have a lot of things open here. Hold on. Cool. It does look like we are in this pound CAD. Let's take a quick look at the all-time frame. I've let's just say I've looked at this thing a million times. I have seen this monthly chart here. I can't count how many times, and I do the same thing on it every time. I'm always going to work my way, left to right. Okay, because that's the way that time works on this chart. Time moves left to right. There's any guarantees is that there will be more bars to the right later. Other than that, seems like we were pretty. We might have been spot on about the bullish period of movement that we had here recently. Looks like we got a little spinning top going on right now. This thing is looking like it's in indecision territory. We've got kind of two ways to look at trend that I know about, at least. One of them is trend. The other one is range. And that just basically means the market's either going up or down, or it's biasing one direction, or it's kind of doing a little bit of both. Okay, so that's really all that there is. So I may come in here close and look at something like this. Let's try to get a rectangle here on whatever zone we think might be important. And I just like to use the rectangle tool because it forces me to use my eyeballs. If you've ever seen my presentation, you've probably heard me say that enough times at this point, but it's stupid things like that have changed my trading career. Okay, so now that I've picked levels that look really important to the chart, I don't necessarily know why, but the market seems to like to reach this price and then turn around. Okay, it did all the way back in 2014. It did that in 2017. Did that in 2018 twice, 3 times, 2019 a couple of times, 2020. Okay, you guys get the point. The market likes this price. I don't really know why. Don't have to, don't care. But let's go ahead and get down to a lower time frame. Figure out if this is something that we are going to be able to jump in. You know, we've already been long on this, and the reason why we've been long has been fairly straightforward. Try to keep this as simple as we can. But this is a low here off the bottom of this box that we drew. Okay, that I think we were just kind of pinballing for a while. We could come back down, who knows? But we did get a higher low here. Here's another higher one that just formed. And when it comes to highs, we've got lots of higher and higher highs that have occurred. So this does look like we're getting this kind of channel moving up towards the top. That could be wrong. This thing could die. It could not go to the top. There's no way to know this for sure. Okay. That's essentially what I'm looking for this thing to do. Okay. So that being said, I'm getting all this fun circles and lines out of here that don't really mean anything to me. I'm just trying to visualize where this might go. A lot of people look at, people like trend lines too. Here's a trend, counter trend, break with a 1, 2, 3 on the top side. So, you can really kind of look at this a lot of different ways. I'm gonna assume that this is an upward biased. Okay, I know that the economy is slowing down a little bit in the UK, especially with this weird Pingdemic thing that's going on. But end of the day, my most important function is to figure out how and where I can manage my risk, and if it makes sense to even trade this opportunity. Because right now, I don't need this line here. Sorry, I meant to grab the chart. Right now, we are a little bit far away from the top of this box. We're kind of right in the middle in no man's land here. But, that being said, if I wanted to figure out how far this range might go just from a Fibonacci standpoint, there it is. And maybe this is a little bit too low of a time frame for me to use that specific range there. Let's try the weekly. And we'll try that same thing from the bottom. Didn't let me do it. Let's draw it manually. Okay. And it does look like we hit our extension here already, so we are in a new fib range that I would want to draw from here. And right now we have already come down almost to our blue level. So this thing is actually, if we continue our uptrend, okay, our blue level is actually right at the top of our range here. Okay, so if we just continue our sideways trend really even, because we did come down to our blue level below. So I'll draw where the corresponding blue level is up top. We'll make this actually in green. I'm going to draw the line, but that's where it is, right at the top of my box. Okay, so if we continue our, next wave, this is where we would expect to end up. Okay, so right now I need to figure out, where do I put a stop loss? Okay, where can I protect my risk? We've got looks like a piercing line formation that's happening right now on the 4-hour time frame. Just closed out, so more indication that we should probably be looking to make buys in the short term, just based on my strategy. Go ahead and get a blue line in here. I love to draw where the current market price is, because I need perspective on how far away that is from where my target is and from where I'm measuring my risk. Okay, so now I've got my big red line on the bottom. Okay, if the market comes below that price, I want out. Okay, so that is a line that you might actually even put outside of your most recent AB boundary, which is where my Fibonacci range is, that second Fibonacci range that I drew. Okay, so now I'm outside of that range. My odds of getting stopped out on this trade are extraordinarily slim, because the market's turned around several times. Okay, that's what this big meaty area over here on the left is, that the market went sideways in for, 6 weeks. So if the market goes below that, that is a big signal that I don't want to be in this anymore, at least not as a buyer. So at this point, I've already got everything measured out. I've got everything drawn here. I don't necessarily need all of this stuff on the chart just to have it on the chart. I can delete it, make it a little bit clearer for you guys. That way anybody that wants to try to follow along will be a little bit easier. But I'm going to go ahead and take a picture of this thing. And I think we're already in this, so I'm just going to let it ride. We are. Yeah, I'm just going to let it ride. And actually, just to show you guys real quick, and if you wanted to jump in this one, for example, you need to figure out how much you're risking in every situation. To where my stop loss is, that's a 290 pip risk. So you're talking about, from a micro lot position, that's a $30 risk roughly. On this pair, probably something like 25 bucks. Okay, or quid or whatever it is that you're trading. But that being said, the upside opportunity that we're aiming for, okay, is like 400. So this is a 1.3 to 1, something like that. So, the reality is you've got lots of time. If you don't, well, let's just say if you don't play this thing too heavy, you can afford $30, then you can probably also afford $15. So the reason why that's important is because if I want to, if this thing comes down back into this blue area where we came last time, I may buy it again, okay, and have 2 entries on this one pair, split up my order into 2 orders, maybe instead of 1. So if you normally trade, maybe you usually trade a mini lot, you might risk, $300 here. Instead of doing a mini, you might do half of that, okay, and then reload on the better position at the lower price. Because if it comes down to this 171.5 price, 150 pips lower, I'm even more interested. So that being said, now that we've got a picture of this thing, I'm going to go ahead and show you guys really, if you wanted to measure that 300, okay, type in your stop loss. Those of you that have never placed a trade before, this may not be your first one, may not be something you risk 30 bucks on. I remember my first trade, and I think I might have made like $6, and I was so excited. I was so excited. But you just need to make sure you get all of your numbers input here properly. Make sure you understand what you are risking versus the lot size. Okay, so you decide how much money is at risk on any trade. Okay, so it's just like anything else. This is a 400 pip opportunity, 290 pip risk. If I do a 0.1 here, that's $290. Okay, roughly. I just multiply by 10. Okay, and then by the number of pips. Okay, that's it. That's how I figure out how much money I have at risk. If you learn that soon, you learn it early, and you keep that number familiar and one that you're okay with, then you'll have a much more pleasant trading career. So I'm going to go ahead and click buy, get the heck out of Dodge. Let's keep on moving here. Okay, so another thing that we looked at over here, just so we're on the same page with this, okay, Europe is taking a little bit more of a bullish stance than they had been before. They had great numbers come out. PMIs are purchasing manager indexes. That's basically, how excited the manufacturing sector is about what's coming down the pipe. So they're thinking that they're thinking that things are hot in Europe. Okay, most likely because they've been depressing the euro while to drive demand for domestic manufacturing. So all things happen for a reason. That isn't necessarily a bad thing that I just mentioned. It's just something that's happening. Okay, so let's go over and check out maybe the EURGBP. We're in a couple of different times. And this thing looks like it may be trying to make a breakout to the north. I could be doing a lot of things. Let's clear this chart out. Okay, let's come to the all-time frame. Okay, this one looks, a lot like every other pound pair that's out there. But I'll expound on what I mean here. I'm going to go ahead and start the same thing here. This is the EURGBP. Okay, we've got this uptrend on the top, uptrend on the bottom. Okay, it doesn't necessarily mean it's coming up now. Okay, it just means that is really what all of the data is. If you look at it from left to right, okay, a lot of people are going to start drawing things over here. Okay, all sorts of different places. I like to work left to right. Okay, and the reason I like to do that is because that's the way the time works. Okay, if someone can explain to me a better way to do that, then I'm interested. We also have this, lower high that's happened. So really, this thing could be making its move upward. It could be a slow move upward. I think sideways, for the same reason that I thought the last one was more easy to figure out with sideways. So let's go ahead and draw that here, okay? And just force ourselves to pick some prices where, the market's made lots of turns. Close to where we are is, good to look at. you know, maybe there's a little bit more conservative level that's down here below. So maybe if we get busted here, this might be an incredible opportunity to buy at our blue line if we come out of this box. Okay. Yeah, Philip, I know they were dovish, just not as dovish as they had been. Yeah, absolutely no. I'm with you. I know that they're dovish in Europe, but generally that really only means as much as they. I mean, doesn't whatever the government tells you is usually just whatever the government tells you. They come out. You can follow them all the time. We've got a video I think that I made here recently that we show a lot. That I showed a lot of Jerome Powell and. What's that? Janet Yellen here in the United States, and they're all full of crap. I don't know how else to put it, but all of the people that are running our central banks, they absolutely never tell you what they're going to do. They are negotiating with the market. Okay, so they never give you their best price up front. You know, they negotiate with them. They're negotiating with on a macro scale. So most of what they do is a psychological game, and you know, I pay attention to it because it gives me an idea of how they might be trying to fake me out. And really, I like to figure out what they need to do for the country to improve, and really, if they even want to do that. So, there are a lot of things to consider lately here. Geopolitical risk has never been like it is right now. So there's just a lot of stuff to look at lately. But right now, I think we had just closed out one of our quick winners here on the EURGBP, and we've been shorting this thing for a few weeks. I think mostly because a lot of people had been long on it, and I like to trade against people. But reality is that we're kind of in no man's land on this trend, and the most recent thing that I can see here is a higher high that just happened. That's higher than anything we saw for all of June, it looks like. Yeah, so the market just made a high 2 days ago, higher than anything we saw in June. If it makes a low here where we are now, and actually technically it already has. We've got this little trend line here on the bottom here. Okay, we may just want to dump this buy. Or excuse me, this sell position. See you later. Okay. Try to play this range a little bit more, because there's lots of prices to aim at above that might make a lot of sense. So let's go ahead and get a fib on here. Just pull one right here, see what we got. And we are at, you know, our little... We hit our blue, maybe our green level, all the way down to our green level on the bottom. So this thing doesn't look like it's going to make a defining move towards the heavens, but it does look like it has an opportunity for us to come up here. 87.6, okay? Doesn't seem far away. Seems like a pretty popular price to me. The market's hit several times in the past, and very meaty portion of this market. So I don't see any reason why we don't get back there. It's been there, I don't even know how many times on this chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 30, 50 times. Who knows? Okay, so the market likes this price. Okay, if say if I were looking for a date to the dance, it might be with 87.50, because I know that she might say yes. So let's go ahead and measure this out. See if the risk reward makes sense. I already know that it does. Here's my stop loss below here. Let's get my current market price, my favorite price to draw. Okay, and our risk reward is solid. Okay, the other thing to take note of, is that this market's moved extraordinarily slow to the downside. It seems like when the bulls do want to make a move, they do it decisively. And I hope that they do it again. Okay, because right here, just to show you guys another... I'll take a picture of this real quick before I do this. I want to show you guys another perspective on this before we move on. But I'm going to go ahead and place a buy here. We already closed out this sell. So we're just going to turn and burn on this one. As we did get this bullish move, but it didn't knock us out and we actually ended up making money. So whatever. I just don't think it's still bearish. But let's go ahead and figure out our risk reward here. Distance to our stop loss, 91 pips. Okay, we're looking for 202. So whatever, we'll call it 91, 200. Okay, so 91, 200. Okay, and now this is a situation of 0.01 here. Okay, is roughly, you know, a $9, $10 risk to try to make $20, $21, something like that. Okay, because pips on this pair are actually worth a little bit more. I think they're 12 cents a pip. At least they are for me in my account. This currency cross doesn't move as fast, but the pips are worth more. And you guys will notice that, you know, if you go slam, you know, 900 pips on the pound yen, you're not going to make 900 pounds or $900. You're going to make, you know, a fraction of that, 80% of that, something like that. A lot of people don't understand that. Rule of thumb is just to use 10. Okay, just multiply by 10. So if I wanted to risk $100 on this trade, I might do a 0.1. Okay, so 0.1 times 10 is 1 times 91. You guys get it? Let's keep on moving. I'm going to click buy. See you later. And gold is already up here. We might as well take a look at that. I did actually want to show you guys one more thing here before we moved on. I'm going to delete all this stuff out. But I do want to take out my favorite tool here one more time. The rectangle. I guess my second favorite tool. The line is my favorite. This is my, you know, second favorite tool. Okay, all I did was make a copy of that. Okay, that's where I think this thing might end up, which is basically where we're aiming. Okay, so the market likes symmetry, so do I. It likes to make similar sized moves because there's a similar amount of buyers in the market for whatever it is that's getting bought. So that being said, that's all we're aiming for. Try to keep this as simple as we can. But that's really what we're aiming at. It's just the distance, the next little wave like that. And this one could be a lot bigger. It could come up a lot higher. We could see levels that come all the way up into maybe this is the range that it would likely want to test above. So if this thing wants to move some more, it may just make a quick move, you know, like we're expecting, and do something like that. Come back down, bottle itself up some more. Maybe it falls, maybe it goes up. No way to know. Really kind of depends on what the crazy people that run the world decide that they want us to be doing with their pingdemics. Which I think it's crazy that there's a new word for you know, there's the Sharpie gates and the there's just so much weird stuff happening in the world lately. But let's keep on moving here. Okay, so already looked at the euro pound. Let's get over to I mentioned oil at the beginning. We're going to come back to gold. I feel like we haven't taken a good look at oil in too long, and it did come down and ding the bell on this 65. Which is something that I think we had a video in our June oil prediction that we were going to come down and ding that level. That being said, this looks like still a bullish trend that we've got going on here. I'll show you guys the all-time frame to give you a little bit better idea of why this thing has been so bullish. Okay, if we come down here and just draw something simple, like a trend line. Okay, my favorite tool. There it is. That's a downtrend, and we broke it and closed above it months in a row. This is the third month that we're above that line. That I think makes me bullish. Okay, here's the other thing that makes me bullish. This price down here at the bottom, okay, is 0. I don't think we're coming back below that low anytime soon. We could, you know, make some more higher highs, higher lows. Here's a high over here on the left before that price. And here's a higher one on the right side of our trend line, which makes it a lot easier to remember. You know, it is the right side. You know, that's usually the side that I want confirmations from. And I'm going to just keep drilling, you know, stupid sayings like that because that's really what's made it easier for me. That doesn't mean that this thing is going to continually go up. What that means is that we are probably not looking at this uptrend, this downtrend line anymore, and we're probably more on an uptrend on the bottom side. So I'm going to come down to a lower time frame, get a closer look at this thing. This is a nasty pin bar. This thing came all the way down to this, you know, demand area that was down here. And I'll use my box tool to draw this demand zone that happened. Hit it like a hot stove and took off for the races. I think that we go all the way to $80. And the reason why I think we go all the way to $80 is because Goldman Sachs told us we were going to 3 months ago. And they've been right so far. So I'll believe them until they're wrong. That's usually how trends work. Okay, so I just pulled a fib from the bottom here, Okay, this thing is making higher highs, higher lows. It's doing all the fun stuff that we want it to do. Just to show you guys a little bit, more higher low action stuff that you could see on here. But here's our low. Let's lock this tool up. Okay, we've got a higher one here, higher one here. I'm just making real defined ones. We've actually got a higher one there. Okay, so these are all higher lows. Okay, higher highs have been happening for quite some time too. Okay, so you guys all get the point, is that this thing is probably, gonna be an uptrend until it's not. Because there's really no reason for any commodity to get cheaper. None of them. Okay, for so many reasons. If you guys have seen the money supply lately, I'm going to show you guys something. Okay, some of you guys have seen this. I've shown this before. This is the debt clock in the US. There's a fun tool on here. I'm going to zoom in on this. Okay, here's our national debt in the top left. Okay, and the US dollar is the reserve currency of the world. If no one's aware of that, then every country is kind of doing something similar to what I'm showing here right now. Since I started talking and showing you this page, the US national debt's probably gone up $1 million. Okay, so if I go ahead and click this time machine button, and this thing goes at current pace until 2025, okay, we're looking at $50 trillion in national debt. By 2025, that's in 3 years. That is a, 60% increase in U.S. national debt in the next 4 years versus, the last, 290 years that we've been around. Whatever. So like, it's very concerning to see these types of levels unless you want to make money on them. Okay. Because what that means to me is that there's a heck of a lot more dollars out there, and there's going to continue to be a heck of a lot more dollars out there, and they want to phase out oil by 2050. So they're cutting supply all over the place. The government just came out and told pipeline companies to have better protection against ransomware, which is very, let's just say the government's not taking responsibility for it. What they're going to do is make sure that the private companies, that actually supply the world, try to keep prices low, are going to get taxed more heavily and are going to be more vulnerable to foreign attack than any other sector. So that's become blatantly evident this year. I'm going to stay bullish here for all of the reasons I mentioned. And I do think that this $80 price that Goldman Sachs found in the same way that I did with this Fibonacci range here, let's actually get this drawn from the right candle. There we go. This is really what I'm looking at on oil. Here's our current market price. We'll go ahead and get that on there just because it's a easy one to draw. You need it for perspective. This isn't something that I always did. It's always the dumbest, tips that have made the biggest impact on my trading career, because I'm historically, when I was a kid, I was a good test taker. I was never a great, like getting your homework done early type of kid. I was a procrastinator. So, it's the really simple, stupid stuff that's made a massive change in my level of organization. But let's get down to our 2-hour time frame. I don't want the stop loss to be necessarily this low. Okay, we haven't broken our uptrend yet. This thing could come back down a little bit more. Realistically speaking, it is at somewhat of a high price right now. It may make more sense to do something like that. So just for giggles here, let's try to figure out what some of the heavy levels might be. Okay, so I'm just going to pull a manual fib here on this most recent AV boundary that we're living in. Okay, so maybe this 69.5 price would be a good place to get in. So I wouldn't necessarily want to jump into this right now. Not to say that you can't, depending on what you're comfortable with risk reward wise and how many times you want to load it into this thing. But realistically, I don't see any reason why $70, a nice round 70, doesn't happen again. It's $1.60 away from where we are now. We're at previous support that could become resistance. We are on a recent downtrend. So I don't see any reason why this thing can't come down just a shade, just to put us in. So we let us to buy a little bit of a dip, but that's up to you guys. I'm going to take a picture of this thing and we're going to move on. I think we've had enough with oil. And I told you I would show gold here. If you haven't traded oil or gold or any of this stuff in your trading account yet, I strongly recommend check that out in a demo account before you decide to trade this stuff live. The leveraging is way different. Okay, so that's something that you certainly need to understand, what lot size makes sense for you and what distance before you go ahead and just jump in the market. So gold has been taking a bath for the last month or so, but it's been kind of sideways. Okay, so the average price of gold is up big time. I think we're at pretty close to all-time highs for the average price of gold. But if we take a look at this, okay, I just want to show you guys the long-term trend. Crunch this thing down. I want the whole world in my hands so that I can get long-term trend. This is the uptrend line. Okay, that's really what we've got. Here's our high on the left. This is a higher one on the right. This kind of makes me bullish. Okay, when I say kind of, it makes me bullish. That's what that means to me, is that the market's making higher highs. This is an all-time high on the right. Okay, so on the bottom side, we've got some higher lows. Okay, continues to make higher lows. Lots of them. Okay, so I think we're bullish. I'll draw a little trend line here on the bottom too to further expound on the fact that I think we're bullish. Okay, so I don't think any reason why this market can't come up a ton other than the fact that it's manipulated, and that if you come back to this debt clock thing, okay, let's go back, or back to this year, back to the future. If we come down here, paper gold, okay, the dollar to gold ratio now per ounce. Okay, so this is if there wasn't any paper gold. There is, however, a lot of it. There's 85.7 contracts. So 85.7 people own the rights to each ounce of gold. Okay, so that means that, 86 people own each ounce. I don't know how else to make that. I don't know how else to say that. 186 people own each ounce of silver. Okay, so I know that this doesn't make any sense, but that's how they keep the price where it is. Okay, so if we're looking at gold, okay, I know that if supply goes down, that doesn't really seem to matter for this at all. It all comes down to where does the government and people in charge, where do they want gold to be? Okay, and how much effect do average people have on that? Okay, so as long as, we've got known manipulation in markets, I'm going to follow what happens on the chart just as much as I follow my heart. So let's go ahead and come down to our week. Okay, and what we're getting here, this thing's been bearish, okay, for the majority of the last, I don't know, since, what is this, June? Let's exit this out here, hold on. All the way since August of 2020. So towards the end of last year, this thing has been bearish, okay? It has made a little bit of an upstroke here, okay? So I do want to take a closer look at this right half over here so we can get a better idea. Let's get rid of all this other garbage. We've already decided that we're bullish leaning, okay, for the long term. That doesn't mean all the time, okay? Here's our outer trend, okay? Now I'm going to work my way in and draw an inner trend, okay? So here's our inner trend. So question is, are we going to break this? If we break our inner trend here, okay, then I'm going to expect something like this to happen. We come to our outer trend, and then maybe the market decides to take a turn later and we go that way, okay? So that very well could be what happens. Could be. Okay, there's really no way to know what the catalyst is going to be. The straw that breaks the camel's back, whatever you want to say. But a lot of people are afraid that the government is, just going to destroy the US dollar this year. I think that the odds of that happening are low. They've been destroying the dollar for the last 50 years and never succeeded. So, you could say that about every major government on this earth. They've been destroying the pound for the last 50 years too. They've been destroying every currency on this earth for most of all of your lives, and the markets still exist. So I know that there's a lot of fear in the market right now, okay, but rest assured that, well, let's just say the rich people that a lot of everybody's afraid of, that everyone's afraid are destroying the world or whatever, okay, they have dollars and they have pounds in their bank accounts too, and they have gold. Money doesn't ever disappear. It just goes somewhere else. And that's why being a trader is, well, in my opinion, an irreplaceable skill, okay? So, yeah, ever since they took us off the gold standard in 72, but generally that would have been I think Nixon did that, and that's probably another reason why there's, I don't know, obviously big cover-ups and all sorts of fun stuff when you talk about Nixon and the Watergate scandal, the original Gate scandal, Which is funny because now there's Sharpie Gate and there's the Pizza Gate and there's all these other ridiculous. Yeah. Anyways, there's a new alleged scandal every couple of days here. It feels like. But let's keep on moving here. Let's get back to business. Sorry, I get a little off task with all the questions sometimes. But right now, okay, I've got our inner trend here. We've got our outlier line there. We're very much in no man's land. I think sideways is probably the safest way for me to treat this gold trade. I'm not going to do anything with the one we've got. If you're not in this opportunity already, okay, 1800 is not a bad price for gold. This is a very bearish move here. Okay, so what you might want to be aware of are the low prices that are most popular. Okay, so let's clear all this stuff out because our uptrend is relatively below. Let's take another perspective on this thing, maybe a rectangle, okay, just to see what our range might be. And I picked this range just because I pick popular prices with my eyeballs, okay. So maybe, just maybe, this market decides to come down to the bottom of our box. The best place to buy gold, where I may be looking at, you know, extraordinarily bullish activity, is down here, okay, at 1,700 bucks, okay, 1697, entirely possible price. And a lot of people may be watching this right now thinking, you know, Will, you're crazy. There's no way gold's ever coming back down to 1,700 bucks. Maybe it's not. Who knows? But that's where I become a heavier buyer. As far as for right now goes, I'm going to close out this one here. We're going to take this 243 pips. Goodbye. Okay. I don't think it's a good idea to be a buyer here right now. And for a lot of reasons, we'll come down to the lower time frame so you guys can have a better idea of why. But this is our current trend line inside of our range. Okay. That does look like a downstroke to me, given that we've got these lower highs that are forming. We've got lower lows that are forming. Okay. So I think maybe this thing works its way down. Could be something like this area here where we're doing it in. And you know, I'd love to get in at the bottom. I don't know that it makes sense to sell it right now. We're right in the middle of our range. So, if anything, I may actually just do that. Okay. I think buying it from the bottom is really ideal because long term, you know, for the next 2,000 years, I'm going to be bullish on gold. Shorting it is kind of, you know, that's up to you. That's a trader's choice type of play. Okay. It really kind of depends on what's available. We are getting lower lows, lower highs in the near term. Also, this is our 2-hour time frame. So, hey, maybe the thing to do, we've got a really nice, you know, head and shoulders formation here that we just kind of broke out a new low on the right side here. Okay, this is a new low. Okay, outside of this range. It just broke the neck on this head and shoulders formation that we've got above here. I don't know if you guys understand what I'm saying. I'll make it more obvious with this broken trend line here. Okay, and the 1, 2, 3 that's happening on the bottom side. Okay, this is what I'm looking at. Okay. So I'm really kind of just expecting, if nothing else, we come down to this meteor zone here below. I'll get a line in here so you guys see what I'm talking about. But this looks like a popular turnaround price. I might make that green where we rip the tape on life and decide to stop shorting this thing, because I don't think it makes sense to try to take it all the way down. But I don't have anything wrong. Well, let's just say I don't see any reason why I can't get back down to where I'm aiming. New question is, where do I put a stop loss? That makes sense. Okay. Stop loss that makes sense is not going to be that far away in this scenario. This might be what I'm looking at. Okay. Something very near term. We've got a couple of previous highs to protect ourselves with for the stop loss. And other than that, we've already hit this target above. I like this for a sell in the short run. If you guys want to know how to do this from Smart Trader, okay, gold is going to have a much bigger, let's just say a 0.1 is very, a 0.01 is very much like trading a 0.1. So there's a heck of a lot more, you know, movement that you're going to see in your account, you know, at a smaller lot size. So if I do a 0.01 here, okay, my stop loss. Actually, do I have this on the, hold on. Yeah, Yeah, so if you have, I had this in the wrong account, sorry about that. But I need to make sure I scroll down and get to gold here, because it'll say non-tradable instrument, okay, in your account. But then you need to just scroll down, gold, okay, and now I can pretty much do what I need to do. It's 18.15 is where I have my stop loss, and my limit below is at 17, call it 75, okay. So I'm perfectly cool with something like that. I'm going to go ahead and click sell. Okay. Maybe we get a little bit of nice sideways movement on gold here. Doesn't matter what direction the market moves, people. That's the cool thing about CFDs, is you can make money in both directions. Samu, as far as smart analytics goes, as far as better or worse, it's just different. I've got a chart over here that already has it open. Okay, and I told you guys last week that I was very bullish on the NZDCAD, and I might as well let's just say I'm still bullish on the NZDCAD. It's not necessarily a better or worse thing. It's just going to draw a lot more stuff. Okay, so personally, for me, I can draw all this stuff almost as, I've seen all of these charts every day for the last almost a decade, so I know where all of the levels are. You'll get to that point, but generally speaking, smart analytics is going to be a shotgun approach that's going to show you everything. Okay, so this brought me to where we are. I already know that this is going to be a bullish opportunity for me and how far I want to trade it. Okay, because smart analytics actually put this up here, up top, and I'll go ahead and draw a couple of lines here just to show you guys where you might aim on something like this. And actually, let's go to we need to go to the weekly time frame or something here first, so we can have an idea of what the long-term move might be. Okay, so let's hide the other stuff that we've already got on here. We have an active trade here. We may. Let's see. NZDCAD. Actually, I think we closed this one out. This one hit profit target last week, which means it's probably a great time to do this thing again. But yes, main thing to understand is which levels are heavy. Okay, so I'm going to go ahead and just draw a box here. Let's get the smart analytics thing out of here. I'm going to try to keep this as simple as possible. Well, I'm getting a message from sorry, I've got to respond to this. All right, so sorry, I had to make sure I got the point across there. All right, so NZDCAD. We've got this major level up top. This may not be as far as you want to take this. I'm going to make this actually clear so that we don't have as much color here. I'm going to draw another box inside of here because I know that there's a lot of different ways that people like to look at stuff. Okay, I just want to give you guys an idea of how you might draw all of these support and resistance lines quickly for yourself. Okay, so really, on the inside of this level here, we've got lots of turnarounds at these two prices. So that might be the zone that I want to aim at. Okay, just inside of my box. Okay, so I don't know if you guys can see that. I'll make this a little bit more obvious. This might be my, we'll call this my end zone here in green that I want to get out and I want to stop being a buyer. Okay, because the market's had lots of turnarounds in those prices before. Okay, so once I've zeroed in on something like that, okay, now I can come down to my day chart, see where we are. Okay, so this big area up top, this might just be what I aim. I'll get out before we get to that point. This is my point of no return. Okay, so I'll put a little green line up here where we may rip the tape on life, get out of this position. Let's come down to our current market price. And a previous low. And I think we've got a solid opportunity here, given our risk reward ratio from current market price. We've got 113 pips in risk, 118 pips up top. So 180, up top, 113, 180. Okay, so I'm going to go ahead and, if you typically risk something like $100, you want to keep everything the same amount. This would be, roughly a point one, to do $100 or something on in risk to try to make 180, just as an example. Okay, if you're the type of trader that, you're okay with $1,000 trades, then you might do a 1.0. Okay, or maybe you're only okay with risking $11. This would be a 0.01, something to that effect. Okay, but let's go ahead and click on buy button, move on here. This is just a continuation of trend. We already hit profit target on this one last week. Hold up. All right, take a picture and we can move on. All right, and if anybody has anything that they absolutely need to see here today, then by all means, let us know in the chat box, and we'll get to that before we get out of here today. But we do have, this is our EURNZD. This thing has been working its way down, just a shade. This is a very active pair, to say the very least. But just to show you guys what's going on with this thing, and we looked at this last week, okay? Let's move left to right on this thing here, and here is our major downtrend, okay? We've also got this on the bottom as well, okay? So lots of different ways to look at everything, okay? There are lots of counter trend lines that happen here as well. Okay, so just to show you guys what I mean by counter trend, there's a counter trend. Okay, and this may be the next one of those big moves down here on the bottom here. Okay, so I think that there's a good shot this thing comes down and a lot more. I do think that it's been on an uptrend kind of for several years. I mean, you're talking about this bottom here is down in 2015, and it's been making higher highs and higher lows ever since then. Okay, so we are still in uptrend territory. Interesting thing though is if you come in here to our slightly lower time frame, okay, we've had this box that we lived in for years. We slingshotted our way out of it. Okay, we're kind of at the bottom of it now. Okay, that's really, this range got created a long time ago. Let's actually make this less imposing, not that bright green that we've got here. Oop, hold on. I'm gonna draw a new box. Okay. I want a place where the market's turned around many times, top and bottom. Okay, that's really what we're looking at in this range here. Okay, so most currency crosses that we've seen have something like this going on for the last 3-4 years. If we go look at the dollar index right now, it looks very similar to this EURNZD that we're looking at right now. We can look at the Euro Aussie. There's no problem, Philip. We can do that next. But at this point, okay, what's going on? Are we in uptrend territory, downtrend territory? I mean, what direction do I take this? It looks like a mess, okay? I know that Europe is going to be dovish, okay? They've already come out and told us they're willing to commit to lower rates. New Zealand, not so much. They're looking to raise rates a lot sooner than Europe might. So let's come down to our weekly. Take a look at what's going on, okay? And here's a counter trend line break right here. Okay, looks like we have a nice hammer forming from this week. Let's come down to our daily. Okay, and this thing looks like it may come down with a vengeance, at least towards the bottom of our box. Okay, so that being the case, okay, we've got a triple top that formed up here. I mean, this thing could do whatever it wants, but it seems like the market is trying to work its way down. It's very painstakingly been moving up. It came down a heck of a lot faster than it's been moving up for the last, just as all the way since February for it to get to where it is right now. Okay, so that is not a big move for the EURNZD. This thing's been bottled up for a long time while the market tries to figure out how to find its pockets. Okay, but you know, if anything, I want to trade towards the bottom of this box at minimum. Okay, so here's maybe my stop loss above. Okay, current market price in blue. And my target will make in green here. Okay, so, and that price has been hit several times. Risk reward looks solid. Let's come down to our 4-hour time frame so we can get a closer look at it. Maybe we can get a tighter stop loss. Maybe we can be a little bit more conservative. I think maybe we can. I think maybe down here, okay, might be a decent place for me to put my stop loss. And then maybe I don't have to be quite as cavalier at aiming at the bottom. I can try to get more turnarounds involved. And now we're looking at a situation where, you know, from current market price, 186 pip risk to try to capture 320 pips. I'm in. 186, 320. Okay, so $18 risk at 0.01. If I do a 0.05, we're risking about $100. Okay, that's basically how that works. Okay, so not quite 100 actually. I could probably do a 0.06 and do 100. Yeah, that's totally up to you guys. Whatever it is that you're comfortable with, you know, throwing away like you just ate a sandwich. Okay, that's really what you should probably be placing these trades with, is an amount of money that you really just could care less about. Okay, and the reason why is because now I don't have to sweat and worry about, you know, is the market going to come against me at all before it goes immediately my way? You know, there's a reason why you have a stop loss, and it's so that you can afford yourself the opportunity to hit it. Okay, I don't know how else to put that, but let's take a picture of this thing. And let's move on here. Euro Aussie. And this one looks a little bit different than our EURNZD, and they are shutting down the economy a little bit more heavily right now in Sydney. If there's any Australians in here, I feel for you. But that being said, we are looking at weakness on the euro, on the Aussie, at least since the beginning of February against the euro. So, you know, that being the case, we're getting higher highs, higher lows. We might just be on a continuation wave here right now. Okay, so this might not be something that takes anywhere near as much hemming and hawing as the other positions that we've looked at. This thing did just hit an extension, and it's on its way down right now. So where it decides to make its move upward, this might be our target up top here. I just need to figure out where I actually want to aim. Put my stop loss. So I've got a current market price here in blue. Okay, outside of my current AB boundary that the Smart Fib tool drew for me. Okay, that's pretty much what we're looking at. I could be more conservative on the entry point, and that's up to you. Realistically, the 618 is down here. Market may get there, it may not. Who knows? You know, so I'll just show you guys real quick, you know, how I might handle something like this, because from current market price, okay, just looking at current market price, we'll measure out risk. Okay, so we're talking about 340 pips. Okay, that's a lot for some people. Realistically speaking, if you are typically going to trade, you know, if you're going to risk $300 a trade, then you might split it and risk 150, okay, by doing something like a 0.05 here. Okay, and now that I'm risking, what would this be? This is 340. And my top side, this is the big move that we're looking for. 473 pips, okay? So we'll say 470. Okay. My risk reward could be better. Like I said, we might be getting in early also. So this may be a situation where I plan, if the market digs against me, which it may not do, by the way. Okay, if it digs against me, I want to get in at the 618 at what I consider the best price. Okay, because now this trade below here at the 618 price, okay, if I decide to get into both of these positions, now I'm looking at a risk reward on my second trade. Actually, just go ahead and open this one. Okay. And my second trade here, 230 pips to try to capture 607. So an incredibly better risk reward just because we, negotiated with the market and waited for a lower price. Okay, so that's something you would set a pending order for. Okay, be a pending buy order. You set this, you type in this second rate value here, this 158.2, whatever it is, 158.2. Okay, and then you put in your stop, your limit for all that fun stuff. You could type in the price, do it however you want. 1.64312 would actually be my limit. So cut that out, paste, and my stop is down here at 155.9. Okay, so that would be my pending buy. So this thing does come against. I've now split my order into two. The second one is a lot better than the first when it comes to risk reward. So if this thing does dig, I'm going to try to get in at the better price just to average myself in. Okay, that's really what that's about. So I've got time to probably do one more. I've got to do some, second half of the year type of stuff with the accounting department. I know it sounds like a lot of fun, but I've got time to do probably one more. So if you guys have another currency cross that you want to see or something before this is over, speak now, or I'm going to pick something myself in the next probably 10 seconds. So 10, 9, 8, 7. USDJPY is probably a good one. Aussie USD is probably coming down right now. You may have time to do both of those. Let's go ahead and pull up the USDJPY. All right, and it looks like we're already in this one. Okay, for a couple of different reasons. We'll come to the high time frame. I'm going to hide this current stuff so we can get rid of the lines that are here. But we are already short. Not to let the cat out of the bag early. Chart settings. All right, and let's go to the all time frame. And this one's interesting. Okay, because when the markets go risk off here in the United States, if everybody dumps out of the stock market, first place the money goes is the dollar, because that's what happens when you close a stock position in the U.S. You get dollars, so that drives up the demand for the dollar, and then a lot of what happens typically after that is money will end up in the yen for various reasons. One, they've got loose money policies. It's what you might consider cheap money when it comes to paying interest, and it's just available. So a lot of money will move to the yen. They're also one of the largest, most reliable economies on earth. Okay, so, and somewhat insulated from a lot of the world. Okay, so right now there's lots of risk everywhere in the world. It's hard to figure out where the least amount of risk is. I think China is talking about potentially starting a full-out war with Japan right now, which, depending on how things shake out, could be very bad for the yen, to say the least. But that said, okay, we are in this somewhat creeping downward type of trend on this USDJPY from an all-time perspective. And if we come down to the weekly chart, okay, this is our weekly. And this is what I'm looking at, okay, is that we've got this broken out trend towards the top, okay, that really has made a little bit more of a prominent view of itself here recently. Okay, so we may be headed towards this outer trend line on the top, or this could be another place where we get faked out. Okay, and the reason why I say this could be another place where we get faked out is because this is what I'm showing you right now, and everybody's looking at this thinking, wow, this has got to be up. How could we possibly sell this? Okay. Here's how. Okay, so the market's all about patterns. Okay, these are all lower highs, just so we're still on the same page. Okay, there's lots of ways to draw this stuff. Okay, but these are all lower highs that are occurring. Okay, so we still have not made this higher high that you might want. Okay, the yen is something that I'm usually going to be very cautious with because, yeah, I mean, it's if that happens, Aussie and New Zealand would be in trouble. I would tend to agree, Hyacinth, if the Chinese-Japanese war happens. hopefully that doesn't come to fruition. But regardless, okay, from a money making standpoint, looking at this right now, okay, I've got these lower highs that have been happening. Okay, my trend lines, okay, my counter trends versus my lower highs have basically given me light to, more downward movement. And you could draw these in a lot of different places. Some people might draw them here, like what I'm doing here right now. Okay, this might be, what you were looking at for the last, few years on this dollar yen. Yeah, this is the flash crash that happened. That one, I can't really even draw it. That happened extraordinarily fast. But there's another one right here. Okay, so just lots and lots of these breaks, okay, in the market. Takes a long time, but it falls. This is the weekly chart. This thing falls for a long time. And it hasn't done this very many times, but this is really, this looks not a whole lot different than what we've seen a bunch of other times. We're at a high price right now, okay? And if I even come down to my, daily time frame, and this is the interesting part about trading, you can frame anything to look like it's going any direction that you want, okay? Just so that we're on the same page. It doesn't matter what you think. Okay, there's somebody else using a different strategy that thinks something completely different than you. Okay, I just know that the trend line is a very popular strategy. Always has been, always will be, and I like to follow the simplest possible thing. Are we getting higher highs or lower highs? Which one? Okay, so we're right now getting lower highs. We broke our trend line. We're on the right side of it, and we've got a lower low on the right side of our trend line. Okay, so what this means to me is that this thing is, at least in the short term, probably going to make a little bit of a move to the downside. We're already in this thing short. Okay, so if I don't think it's even going to be let's just say maybe this isn't going to be a super far move. Who knows? Let's measure with our fib tool. Okay, let's maybe aim for something modest. Okay, I think this 108.264 level seems fairly modest. I don't think crazy aggressive. Still within our range. Okay, looks like a very popular price for quite some time. So let's go ahead and make this one green. Actually, we'll come back over here. We'll get all these lines on here, and then we'll change the color. Okay, this is where our stop loss would be above, and green on the bottom here. We would be looking for a sell. And I think this thing could happen. This could happen fast for a lot of different reasons. There's really no way to know. It's a kind of pick a number lately. What do you think will cause the next political downfall here in the U.S.? Could be anything. Now what I want to do is I want to narrow up my risk and narrow up my opportunity on the bottom side so that I can be more conservative to make a trade that's, more likely to execute in my favor. Okay, so what I mean by that, okay, right now our stop loss is a little further than it needs to be. I'll tighten that up. Okay, so if the market does move upward, I want to get the heck out of Dodge. Maybe I even do it lower than this price. Okay, maybe I even use these highs right here. Okay, so I could also use something like my smart resistance here. Okay, so I've got 3 levels right there. I may as well just have my stop loss right above those 3 levels. And that way I don't have to be quite as cavalier on how far I take this thing below. And then if I want to look at, I can do the same thing with support on the bottom. Everybody resonates with a different trading strategy, so I'm trying to show you guys as much as I can. So, maybe I don't want to aim towards this level that's just below all these levels of support. Maybe I aim somewhere like right in the middle of them so that I'm more likely to get taken out and actually take profit on this trade and still have pretty good risk reward. So now we've narrowed this down a lot. Okay, maybe I'm not going to, try to hit as much of a home run as I was planning on trying to hit. Maybe this thing comes down another mile. Who knows? Okay, you could run an automation on something like that also if you wanted to, and it would kind of, check your work, I guess, is how a lot of people look at that. But from here, pretty straightforward. Okay, our risk reward, talking about a 72 pip risk, versus a 170 pip opportunity. Sounds like fun to me. So 70, 170. Okay, stop, limit. Let's go ahead and get the number we want in here and click sell. Goodbye. Save. War in what sense?
You know, it'd be tough to say. My audio connection has been lost, so I'm leaving, and I'll watch the recording. Yeah, it must be weird to just watch pictures, so I understand. No problem, Deva. I should have this recording up here later this afternoon, sometime in the next few hours. It does take a long time to process the video and do all that fun stuff, but we are just about out of time here. I want to make sure everybody is aware of all the resources that we've got available. I am actually going to be launching I guess you would call it a nurture campaign that'll share all the YouTube videos with everybody. If you're not on the YouTube channel already, some of you are probably watching YouTube now, but the 123Trade.com is going to pull in a lot of this stuff. I showed this news page earlier. We haven't actually put a link to this anywhere yet. Still trying to get, more pretty stuff put on here. There's an ebook actually that you'll be able to download from here also. That should be pretty awesome. If you have questions about that, then by all means, send us an email to brokers@123trade.com. But we've got lots of trade ideas. I'm going to post these in the Facebook group and the Facebook and Discord server once we get out of here today. If anybody could, while you're here, if you could give us a little bit of a review, would be very nice. I'm going to go ahead and click on this. Maybe I can share this link with you guys. I think I can. Here it is. But if you guys are interested in giving us a review, then please, this helps us a ton. If you're not going to give us 5 stars, then let us know why. I mean, we offer a free service and give free tools and show free trade ideas. I can't imagine why you'd be mad at us, but I'd like to know if that is the case. Anybody that does leave a review, I really appreciate that. We do look at this stuff. We haven't really pushed this a whole lot as far as getting reviews goes, but it's pretty easy to find us. You just search 123Trade, no spaces. And otherwise, the website's going to have lots of information. There's going to be more of it coming here soon. But it is, time for the weekend, people. Hope you guys had fun this week. Hope you guys have a great weekend. And if you can't be good, then be good at it, folks. Take care.